Why does Bitcoin's price fluctuate so much? Hmm. Um, Great question. In some ways, Bitcoin is a true reflection of reality, in my opinion. And what I mean by that is it's life is crazy, right? One minute you're happy, the next minute you're sad. One minute you're angry, the next minute you're Zen meditating. That's life. And it's unsurprising to me that the price of money tracks volatility like that. Now, what's a lot less natural is a completely stable price. Like humans aren't stable, and this is one of the interesting parts of this that just shines a light on the stupidity of central banking in some ways and their supposed high level goal of like we're going to create maximum employment and we're going to give you stable prices. It's like okay, but like we discussed before, value is subjective. The Bitcoin price, which is the most liquid international product for money or the most saleable good, right, as discussed before, it's volatile because different people and different time zones speaking different languages with different problems are using it all the time. And so, what to someone is a great buy price, to someone else is a great sell price. Yes, there are other reasons for its volatility, but I think that's the main one, right? It's actually the first time that we've got a measuring stick on human activity. And to dig into that a bit further, like, well, what is a price? Price is in some ways a reflection of the inputs of a good or a service. And what a price tells us is a huge amount of information. But what it really is that we're talking about the language of value. And value, in many ways, is subjective, but prices are used to measure it. Now, another really cool part of learning about Bitcoin is like if you think about a 30 centimeter ruler, that doesn't change in length, right? It's a distance. It doesn't change. We use rulers for measuring distance. What about the temperature? Well, you might have a temperature gauge somewhere and it says it's, 15 degrees or 20 degrees Celsius. It doesn't change, right? You see the measuring stick or the measuring tool used doesn't fluctuate. Now, when it comes to money, at least the commonly used money, how many pounds are in existence? How many euros are in existence? How many US dollars are in existence? Ultimately, we actually don't even know. Like the Bank of England stopped producing reports over a decade ago as to how many pounds it's printing. I try to find this information out. You literally can't. So they talk about M2 money supply and global liquidity. And in many ways, Bitcoin tracks the total money supply. That's a very helpful metric in some ways. It's like from a macro perspective, what the hell's going on here? Well, basically, all these central banks are printing money at a certain pace. Some are inflating at 2% a year. Some are inflating at 20% a year. Some are inflating at 200% a year. But they all combine together to create global liquidity. And that is generally speaking what is driving asset prices. So there's this fascinating thing where you can start looking at, we'll say, the FTSE 100, the top 100 companies in the UK. You track the FTSE 100's growth against gold, not really going anywhere. You track the FTSE 100's growth against the M2 money supply, not really going anywhere. It's absolutely crazy. And so when you start studying the history of money and how it affects people and what's happened before, like another great book to reference is When Money Dies. And this is a period of time after World War One, and the Germans, they had, at the time, it's called the Weimar Republic, and basically they hyperinflated. And everyone thought they were getting rich because the stock market was going up, the house prices are going up. But really, what was happening is the denominator that they were measuring value in was disintegrating in value. And that's what's happening today. So it's a really core point. And we spoke about this earlier, purchasing power. Purchasing power is the question or the frame or the lens that you have to look at everything with. And so when you get someone who's a wealth advisor and they come to say, oh, we made you 4% this year. Okay. What was your fee? 1%. Okay. And what was your funds fee? They go, oh, that was another 1% or whatever. Okay. What was the CPI? Oh, that was 3%. All right. Well, what was real inflation? Oh, well, no one knows what that is. Okay, well, how did house prices go up in central London? 12%. Okay, what did the oil price do? 10%. What did the gold price do? 18%. Ah, okay. So suddenly you're looking at these other metrics that measured in pounds or measured in euros or measured in US dollars, whatever it is, the denominator is disintegrating. There's no place that shows this better than real estate. And you can ask a real estate broker that sold the same house 4 times in the last 10 years, why has that price gone up? And they'll give you the same bullshit. Immigration's changed, interest rates changed. Oh, we've had a lot of new people move to the area for some reason, or that school was built, or whatever. Now, there's no doubt that there are physical limits to population growth and to areas and geographic zones that mean that house prices fluctuate. But are you telling me that they move as much as they've moved because of just that? No. And so you track real estate prices to the liquidity levels in the local currency, and you'll find it's basically flat. So there's basically one big lie going on. Why does Bitcoin's price fluctuate so much? It's essentially a map of reality in my mind. And what is not reality or what is unnatural is the idea of a stable price. And what's also going on is all the money printing. And so when you look at a price, well, hang on, this can of beer, okay, one year this is going to cost you $10, and the year before it cost you $8, and then next year it's going to cost you $12. Well, how many dollars were in the system when those prices were made? Honestly, it's very, very hard to find that information out. Now, how many Bitcoins are there? 21 million. How many have been issued? I think it's like 19 or something. And so you start to see this picture where, yes, Bitcoin is extremely volatile in the short term, but it's for a reason, which is that humans are completely crazy. And also, it's the first time that we're using a measuring stick that's not changing. And so the idea that like 6 blokes can get together every quarter and be like, okay, I think the price of money should be 4%. And that's what an interest rate is on base money from the central bank. Whereas Bitcoin is the price of money in real time, traded 365, 24/7. It's absolutely wild what's going on. So welcome to the language of value, and welcome to another way of looking at the world completely.